Hey there everyone. Going to talk some more today with you about personal loans. This is our second video in our personal loans series. And the first, we introduced what personal loans were, pretty self-explanatory, highlighted some risks and returns from both the human and the financial side. And today we're going to be talking about the single most important thing that you need to do if you are making a lending or borrowing in a personal loan situation. So let's just jump right in. What's the most important aspect of being part of a personal loan? Get it in writing. That is the number one crucial element of being involved in a personal loan. So there's two parties involved in a personal loan, the lender and the borrower. Both of you need to be, whether you're the lender or the borrower, in agreement of everything that's written out in the document, and you need to sign off, date it, and store a copy for yourself. So what do you need to have in writing? First and foremost is the amount of the loan, the principal. How much are you borrowing? Second, you need to have the interest rate agreed upon of what the lender is charging and what the borrower is paying. Very important. Time horizon. How long is the loan for? Is it a 36-month loan? Is it a 24-month loan? So you need to have that set up and agreed upon. Now I want to talk to you a little bit about a personal experience. So I've been part of two personal loans, as I referenced in the first video. The first personal loan I was part of was borrowing money from my grandmother to pay for my first semester of business school while I was getting my MBA. Nothing was written out. Hindsight, that was a bad decision by both of us because, yes, I eventually repaid her, all interest included, but there was definitely some gaps in my repayments. So we learned from that mistake, and then when we made a personal loan later on, a few years later, we made sure that everything was in writing. And it has been a huge success for both parties involved because there's no debating about what penalty or when the payment date is. It's very clear, clear-cut, dry, and that individual has a copy and we have a copy. So it's accessible to us both. So very important. All right, I got sidetracked a little bit there. But let's go back. So the last thing I said was make sure that the time horizon's written out. So once you have the principal of the loan amount, agreed upon the interest rate and the time horizon, then you can calculate the monthly payment or weekly payment, whatever the payment cycle is. But that's very important also. Are they monthly payments? Are they bi-monthly payments? So you need to agree on that as well. Date. When are payments due? Are they due the 1st of the month, the 5th of the month? And very important, but often overlooked, is when is the first payment due? So if you're lending money right now, say the middle of the month, is the first payment due 2 weeks later on the 1st of the month? Or is it due 6 weeks later, the 1st of the following month? So very important point that you need to hammer out in the loan to make sure there's no confusion with this. And penalties. Penalties are very important. What's the penalty if there's a late payment? What's the penalty if maybe there's 3 months of no payments? So you need to decide what payments are. And sometimes there's other penalties, sorry, I said payments, penalties to that don't necessarily revolve around payments. So the personal loan where we were actually lending to someone was to help that individual get out of credit card debt. So what we decided to do is say, you know what, we're going to loan you the money to pay off your balance in full, put you in a good starting position, a lower interest rate than you would be paying on credit cards themselves. But here's the thing. We want to see your credit card statements for the first 3 months after the loan because if you're carrying a balance, you need to pay us another $25 on top of the original payment. And that's happened and it's come up, but it's been crucial to have this understanding in writing. So remember that. That's an example of a penalty that we've assessed not related to payment. So make sure you call those out as well. So moving along here, collateral. Is the borrower pledging any collateral to back up the loan? Another thing is default. You definitely don't want to deal with this, but what should happen if the borrower cannot repay the loan? You need to have that figured out. Now, document preparation. Are you going to have an attorney do this, or are you going to do it on your own, or maybe the other individual, or a joint effort? Best case, best practice, an attorney definitely does it for you. In our case, we've never used one. Working with family and friends, you kind of want to save that dollar. I get it, right? But I have to say, best practice, get an attorney. If you don't have an attorney, there's no reason why you can't download a template from the web or somewhere and apply it. Once you have everything written out in an agreement, then what you both need to do is sign it, date it, and keep a copy. Each party needs to sign, each party needs to date, and each party needs to save a copy so there's no disputing what is in the document if they agreed to it, and both parties should have access to the agreement. So I know it seems very tedious, but single most important aspect to set yourself up for success in a personal loan is to get it in writing.